Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Thanks for joining us. Today we have Jack Crooks with us. Jack Crooks, of course, is the president of Black Swan Capital. Jack joins us very, very often, talking about his views of the U.S. dollar relative to the majors and how you can look at the markets as far as the possible scenarios, as none of us really know the exact future, but we might have some sort of feeling, and once you do, you might look for a setup. So Jack will be talking about, again, his view on the dollar and its potential that it might lose its reserve currency status. It's going to be a great presentation. Jack does present for us very, very often. And without further ado, I would like to introduce Jack Crooks. Jack, thanks for joining us.
Hey, Steve. Thanks again for having me. Appreciate it. Always fun. Love the questions that we get from your viewers here. Just going to go through today, as Steve said, really a couple scenarios. Just some of the leading edge stuff that has people concerned about the reserve status in the dollar, why the reserve status is so important to the dollar, and also give some counter reasons why this may not happen, and this as an issue may actually go away in the near future. But we'll see. And as Steve said when we were chatting earlier, often when markets get into bull and bear market trends, regardless of the market, and especially currencies, because of the fact that they're so sentiment driven, because there's so many different factors that can drive these currencies. People latch on to rationales, and this happens to be a rationale in the market right now, this whole idea of the U.S. dollar reserve currency status, and hopefully I'll shed a little light on exactly what this is and why why it may not be as a strong rationale, or depending on how you take some of the positive side of the fence in terms of this playing out, this may strengthen your view that this rationale is for real and should be traded on. We just have to be careful. Often at the end of major long-term trends, we see rationales pop up, I guess is the point I wanted to make, that may be false, but it doesn't matter. They provide that sentiment, and then sooner or later they go away. So I think this may be the case, but there's no doubt with the dollar in this cycle, this is the first time I think that this idea of the reserve currency status has had some plausibility. So for that reason alone, I think it's something that you should really examine and take a look at. So our disclaimer. Okay, first I would kind of describe what this reserve status is all about and why it's so important to the U.S. dollar. And the U.S. economy. Needless to say, if you are the country that has reserve currency status, by virtue of that, it gives you a lot of financial and political power that goes with it. So it's not just financial, it's political. And often the makeup of the country that has the reserve currency status is the largest and most powerful economy. It's one that has very strong, usually strong industrial base, which is obviously changing in the U.S., which concern people. But we're moving into the knowledge era, so maybe that's changing given that we have the lead in cutting-edge technology. Again, open to question. Also, by virtue of the fact that the reserve status country tends to have the deepest and most efficient capital markets in the world, and the U.S. economy sure does fit that bill, given the depth of the U.S. Treasury market, depth of the stock market, and the ability to do sophisticated financial transactions. A third quality, of course, is this idea of projecting power, military power, and the U.S. is still by far the largest military power on the base. So from those standpoints, and again, the depth of the capital markets, U.S. power, and again, even that is open to question whether or not U.S. power is viable in this new world. So there's some real, some real question marks here, obviously. And as I said, I think this is the first time in the cycle since the U.S. dollar started to float back in 1971 that this idea of reserve currency status has been open to question in a very big way. The fact that a currency is the reserve currency means that other countries in the world must hold that currency. And the reason they must hold that currency is the fact that they trade and they do major capital flow deals across borders. Most all commodities in the world are priced in dollars, in the U.S. dollar. Therefore, if you're a country, for example, that needs to buy oil and you don't produce it domestically, you need to get a hold of dollars to buy oil because oil is priced in dollars. It's the same thing for gold, same for most other commodities. Again, at the edges, we're starting to see some of this change. Iran wants euro and other currencies instead of the dollar. We've seen some trade deals between China and Brazil, where now Brazil is able to use the Chinese currency to do cross-border trade deals, and China's trying to use that model for some of its other trading partners around the edges. But again, it's a very small quantity relative to the dollar. The fact that, again, people have to hold dollars makes the dollar very, very different from any other currency in the world. You don't have to hold other currencies to trade, do cross-border trade. You have to hold dollars. So if you just think of that in and of its own, itself, it's a major underlying prop for the dollar. And there's no doubt, if you look at what the U.S. government has done over the last several years, they've really abused this reserve currency status in a very, very big way with deficits and spending and dependence on international capital. But that may be changing. But in so many ways, they've abused the status. But the reality is the dollar and the financial markets are so deep that the dollar's penetration as a reserve currency has actually increased. And in fact, in this bear market cycle that we've seen for the last 7 years from beginning to end, the U.S. dollar will probably come out of this if the dollar rallies in here, or at least holds its value in here, probably closer to 70% in proportion held by reserves of major central banks around the world denominated in U.S. dollars. It's really interesting, and I think it goes to the fact that so many derivatives and new things were created and dollar-based credit was created and spread out across the globe that pumped up a lot of these asset markets. You actually saw the volume penetration of the U.S. dollar as a reserve currency increase as it was falling and falling and falling in this nasty bear market that it was in. So that's an interesting concept, and we'll get to that in a minute. But needless to say, the difference for a reserve currency is because things are priced in dollars, other countries must hold it in order to buy other commodities and do major cross-border deals. If you think of it in the flip side, if this status starts to go away and everything else being equal, meaning somebody shifts to another currency or a basket of currency, obviously the dollar starts to lose a major prop and could really fall in a very, very big way. And needless to say, that's the concern here, and we're going to talk about that and what might be the major driver.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.